The charts are not pretty. We've got larger volumes on these heavy down days, and it's making it difficult to find a positive looking chart. Gary Glover walks us through the updates, where he's looking to add more short positions, and why the big miners are not yet looking appealing at these prices. Good morning, Gary. How are you?
Yeah, no, good summary there. Definitely. That's why I looked through most of the charts there, and yeah, exactly. It was a pretty bearish couple of weeks here for the market, heading down. So, look, it's funny sometimes when it looks that ugly, that's kind of when you can bounce, but the bigger picture wasn't so good. So, you know, maybe we'll get a little relief rally here to break up this ugliness, but the bigger picture does not look so pretty. So yeah.
Well, that's probably a good point, the bigger picture to starting off, because those who follow you and know your report and how you've been able to pick the right side of the market and time the highs and lows exceptionally well is with your overarching look on the market, the indices and the cycle. The 60-year cycle helps, and we'll come to that in a second. But that bigger picture, if we start looking at the NASDAQ, you've timed that exceptionally well, the mid-August high, you've said for the mid-August low. Now, what we're noticing on the chart here is that these black bars, these down weeks, are looking like there's a fair bit of space in them, like there's a lot of move, and we haven't seen that for a while. Is that a bad sign?
It's not a good sign. Yeah, so pretty negative there. So it's actually, this is probably more like that rally there had a bit of depth to it. The rally up to the August there, so it was actually, you know, there was a bit more volume in that than compared to the previous ones, but the selling that's come off the back of this high here has been even more aggressive, and the volumes have been up there. So I think the S&P's had like 6 distribution days off the high already, which is pretty, that's basically strong selling off the high, so that's not a good sign, and that's an impulsive move down, which is not a good sign as well. It's probably more bearish than most of our cycles there. It's actually, when I was literally just talking to someone this morning about all the different cycles there, it's probably, you know, most similar so far to the 2000 and 2002 move there. That didn't end well. So yeah, so that's, yeah, it's just pretty bearish looking chart there. As I said, it's impulsive. There's strong volume in there. Yeah, pretty aggressive selling. So that's just not a good sign. So you could get a little counter move here, a little pause, a little sideways move, but just that's pretty aggressive so far. So that's just not pretty. So yeah, just got to be pretty cautious here right now with that.
Well, it's falling towards that lower end of the channel, and as you're saying, there could be a sort of a sideways pause, but it's still looking like almost like a magnet's attracting it down towards the pre-COVID highs, that sort of region. Is that still the target zone?
Yeah, it looks like it. I mean, after that sort of pretty decent rally there, I thought, oh, maybe this is going to follow the 60-year cycle and make a higher low. But the way that impulsive move has come off the high there, and the escalation in the volumes, that's already got me thinking, wow, this is a new low is going to, you know, is more likely now. So basically, come back and retest that 2020 high there. So that now looks, you know, on the NASDAQ there, it's back to 10,000 there, and you know, look, it might even overshoot that. Sometimes you overshoot these ranges as well, so don't be surprised if it overshoots here. But that's not it's quite bearish, I guess, is what we'll say. It's quite an aggressive sell-off there. So yeah, it doesn't look like a higher low setup here. It looks like a new low setup here. That's probably yeah, more likely now, I think. Yeah.
So if that's the US markets, when we look at the Australian market, you've said that sort of within the market, within the indices, when you're looking at the companies, there've been those that are rallying with lighter volume, but then the falls that we've had in the last couple of days and weeks have been on bigger volume. And also noting that you've now got an 8% bearish position in BBOZ, yeah. So does that kind of tell us what you're reading into the markets? Is you're still pretty bearish on the Aussie too?
Yeah, it's just sort of yeah, I mean, obviously this sort of, you know, we've had this sort of counter move up here and made another lower high here, and then straight off the shoulder here we've had a really impulsive move down on pretty strong volume. So again, you know, are we going to see, you know, I guess the question was, were we going to see a high low or a new low in October? And again, this is sort of looking like, as much as our market's been quite strong here, can often be more of the value market and hold up a bit better. Just looks a little negative here. It's really been quite aggressive there. It's probably led by some of the commodities have been pretty bearish here. Some pretty strong selling in commodities there. So if commodities do get a little bit belted here, then that could drag us down here. So probably just go marginally lower, but yeah, it's just, typically our market looks pretty strong here, but that's not a pretty picture. So pretty aggressive selling, lots of stocks that have sort of gone up there, and the volume sort of really declined over the last few weeks. And then we've just seen some aggressive selling off the high here the last week or two. So again, not what you want to see. So we are, you know, the early stages here that this is, you know, a little bit more bearish than I thought it might be. But we just got to, you know, let sort of price action sort of dictate here. And oftentimes, you know, with these sort of these roadmaps here, which is obviously the next chart there, that they give you a sort of guide as to sort of what you got to look out for. But you've got to let sort of price action and volume really dictate what you think is sort of occurring there. And we just definitely saw volume start to lighten off into that peak, and then we've seen volume pick up on the turn down here, which is just that's a sign of weakness here. So yeah, so it just does suggest we're going to go a bit lower here.
Okay, so that's that 60-year cycle that we mentioned just earlier, and that's how that's mapping out. You've sort of October 2020 lows coming up to a November 2021 high. It was marginally surpassed, but then coming towards that
Yeah, so the
June.
60-year actually made a higher low, but if we look at those sort of midterm years, sometimes they can make marginal new lows or can go deeper lows.
So that's October you're talking about?
That's right. So so October 2020, so October 2002, so the 20-year cycle actually made a deeper low, and occasionally they do make deeper lows in October here. So far that price action is just pretty bearish. It's pretty impulsive, pretty strong volume. It's already moved very deep in the first couple of weeks down. So that would basically, you know, that should have us, you know, adjusting our roadmap to, you know, to think, wow, this could go lower here. That's now leaning. It's got to get us leaning towards a new low here into October. So plenty happening in the macro environment, which is not friendly. So plenty of reasons as to why the market could sell off here and get a bit more aggressive there. You know, rates going up aggressively here. You got inflation concerns here, energy prices still high. So a lot of macro pressures on this economy here. So housing prices starting to fall, housing sales drying up. Just, yeah, I mean, I just looked at some macro charts here this morning. It's like must have been 20 sort of big charts there. Now, it wasn't too many, painting a pretty picture. So you can sort of see why we might get something aggressive here. So just got to keep that in mind.
Well, that's yeah, definitely good to map that, overlay that current macro over the price action and the 60-year cycles and the midterm cycle. Now, you had mentioned the commodities earlier and looking quite bearish, and then what you've said here, I think the bearish flag. So what is this bearish flag, and why is it important to the Australian market and the miners?
So I actually posted a cycle there, which I have attached at the end of this report here, which sort of talk about the market sort of business cycle. So we know sort of like US bonds have been sort of falling for 2 years now. Stock market now is starting to turn down as well. And then commodities is the last stage of the business cycle sort of turning down, as obviously we head into recession. And then once you're actually in a recession, normally that's when the market sort of turns up. So by the time you find out you're in one, then equities start to sort of move higher here. So, but the important thing there is that commodities is definitely it's the third, and the last asset class to sort of turn down here. So just looking at that CRB index there, we're starting to see some of the commodities starting to break down. We saw some pretty aggressive selling there last week in some of the commodities. And that CRB index, that's the basket of of commodities, and we see that it's had a kind of impulsive sell-off from the high, and now we've sort of got this little bear flag here, which is what I consider one of the more bearish setups there. I mean, if I saw that on the XJ, I would trade that every day of the week. So that's just a bearish flag here, not so positive there. So it's just painting a bit of a bearish picture for the commodity basket in general. It doesn't mean every commodity will go down, but it does mean a lot of them generally will, particularly the high flying ones here. So that just looks pretty negative. I mean, you've got the US dollar, which is just on a tear at the moment. That is super strong here. You've got the pound, which is just falling aggressively. We were just talking about that earlier, how there's nothing's going to save that. That is in a really aggressive downtrend at the moment. So that doesn't look pretty. So just macro picture is not so pretty here. And looking through all the commodities, US dollar, just all those things are all working against commodities here. So that's just painting, so I know everyone's sort of talking about being long commodities in a high inflationary environment here, but a lot of the technicals and a lot of the macros are actually telling us to be super careful with commodities, and be quite concerned about what's happening there.
Well, that's probably a good point to have a look at the Australian commodity leaders. And if we talk commodities, well, we think of the big Australian BHP. You've got a great chart here, and you've got the Fibonacci levels, which are these blue ones. So the zero starting at the high, and where the low it came from is the 100. That's the percentages along the way. But would you mind walking us through how you come up with the ABC? Because that seems to be a critical pattern at the moment. You've got the A, the B, and then looking for a C. How does that pattern work, Gary?
Yeah, so anyone who sort of studies Elliott wave there, I mean, they talk about the most common sort of correction is like a three-wave correction. So oftentimes you sort of see these in strong trends. You might have a little three-wave pullback, and then you move higher there. I think, you can see that just before the high there, and sort of from April through to June of 2021 there, like a little three-wave pullback. That one there, yep, bang. Oh, the next one there, Chris, so yep. Little three-wave off that high there, and then it's gone higher there. So the safest place to often buy is wait for a little three-wave pullback and then go. But the bigger picture there, you can see these big sort of what they call these flat corrections, which are sort of these big corrections there, and that's sort of often there's sort of these larger ABCs can ensue with stocks and for commodities and indexes as well. So just the theory is here that this is like a big flat correction. So gone down, we've overbalanced the trend, which is our A leg, gone back to retest the high, which is our B leg, and then our C leg down here. And probably the big concern here is that that's the big macro picture there, which suggests a retest of that sort of $32 low from the bigger technical Elliott wave sort of pattern there. But the volume profile is a really concern as well, because we've seen sort of that, some of those rallies up into these. I mean, just look at the last rally there, the last 3 or 4 weeks up into the high there on pretty light volume, and then bang, we've got a wall of selling. I mean, the selling was almost double. For a lot of those commodity stocks here, the volumes is almost double what it was the previous 3 or 4 weeks up into the high. So just really aggressive there, and that's coming after we've got a lower high in there, we've got a bigger negative picture. Just got commodities starting to fall here. So potential. I mean, these energy prices are going to put a lot of constraint on economies and small business and large business, and so that pain gets forced down the line there, and so just painting a bit of a bearish picture there. So the technicals to me are sort of suggesting that BHP will come back and retest that sort of $32 level. So I just think that looks pretty negative there. I think just most of the big caps look pretty similar to me. Fortescue, which is the next sort of chart there, I mean, that's basically, you can actually argue, Chris, that's a 0, 1, 2, 3 pattern there. We've sort of had a high in place, a lower high, a second, third lower high as well, place there. Again, drilling into the volume profile. Last little rally up there was light volume. And look at this. Look at the super aggressive volume on the sell here. Even the last leg down, the volume was, was super, aggressive as well. So the the selling volumes are, really elevated, and we're rallying back up here in lighter volume. So bigger picture is pretty negative. Series of lower highs negative. Volume profile negative. Macro picture negative. It's just yeah. So I mean, I just would not be jumping in too quickly here on these resource stocks here. I think that with Fortescue here, this is not like a flat structure like BHP. Actually made a lower high, which usually means our C leg should come a bit lower here. So in the case of Fortescue, it's not going to just come back and retest the $14 level. It could go quite a bit lower. Might even come back to something like $11. Maybe come back 61.8% of the range or something. But that's just looks pretty bearish here. Some of those commodities starting to turn down here. So just pretty bearish picture. So just do not rush in and try and buy these commodities here. I know everyone's out there pushing the commodity story, but yeah, just be cautious there with that.
Well, you've also got another one, which is mineral resources that you've put on the chart here, and that is 1, 2, 3. So this seems like the three thrust highs that you were looking at earlier in the year. Seems really reminiscent of that.
That's right. Yeah. Yeah. So basically, sort of the three thrust high, or basically what we call a rounding top, is quite a bearish pattern there. And sort of apart from being a bit of a false break of the high, that's just sort of like it's a classic sort of topping pattern. It's just something you see in resources as well. I mean, I think in those sort of like BHP there that makes these three thrust highs over and over again. Historically, sort of there's just so many instances of them popping up everywhere. So it is sort of a more common in these sort of large resource sort of stocks here, but pretty bearish. And look at the reversal week there, Chris, as well. So again, we've sort of gone up on pretty light sort of volume rally into the last leg, which is just classic sort of stuff here. You go back to 07 and look at what happened to BHP and Rio. The last leg up was on super low volume, up into the $50 and $100 highs. And then,
some of the ticks were 50 cents in between price trades for Rio.
It was just super light sort of volume there. It was really the last leg up was on really light volume, and then you saw selling like this. You saw elevated selling here. So we got a bearish. We got a false break. We got this rounding high here. We got escalating volume on the selling side here. It's just not a pretty picture here. So again, just be cautious. I would be standing back here from these resources there. Don't see a few sort of fundamental guys talking about resources there. Now, everyone talks about the dividends. Dividends are high. There's low PEs, high dividends, but that's how it works. So every top of the cycle in commodities, they always got low PEs and high yields. That's the sweet spot for them. And the cycle changes, and then prices decline, and then all of a sudden, you're not going to pay out as much there. So miners are typically sort of capital beasts. They sort of tend to sort of rip through capital. You got to keep drilling holes, keep finding resources there. So capital intensive businesses. So they really need to be have really, really high commodity prices, and the currency needs to be in a good spot as well. So a lot of the time, to make those big returns here. So the cycle can change really quickly for resources there. So again, just got to be really careful with those.
So we've been through 3 pretty bearish stocks on the ASX after an overall macro that's not looking too pretty, which explains why you've got so much short position in the portfolio and why it's been performing so well. It seems like you may have found something at the other end of the scale where you've got a false break, and this seems more like the kind of thing that you trade and you buy that your long-term listeners would be familiar with. Is this one of those ones?
Yeah, a little bit. So it's almost a contradiction here, because obviously, gold is still another commodity. So, but I just wonder here, I mean, gold has not followed the basket of commodities so far. It's actually been literally gone sideways or sort of downward here for the last 12 months. So basically sort of gone nowhere. So while the rest of the commodities have been on a tear, it's been pretty weak or, largely sort of sideways. So can it sort of come to the fore? I mean, but yeah, just interesting here. A few stocks are showing there's, signs of accumulation there. Some of them have come back a bit deeper here. I'm a little suspicious of gold because it's given me a couple of buy triggers here for this year, and both of those have actually bounced on both occasions, but they have not followed through. So we've had a bit of a bounce in gold, but no, which is, I would say, if we look at the history of markets, inflation periods there, gold has often been have done well in those high inflation periods. So as has energy. So so gold hasn't performed so well here, but that's probably largely due to the currency, and possibly Bitcoin and whatever other reasons there, but just hasn't sort of performed here really. But it's just interesting here. I just saw a few gold stocks. Definitely volumes are starting to get a little bit elevated here, down at the sort of on this sort of sell-off here. Quite a few gold stocks have gone to new lows. Some of them are like Gold Road, I think Northern Star making higher lows, and there's starting to some volume come in there. So just probably maybe a little early here, but definitely just a sector to keep an eye on here. It's one that I sort of keep thinking there's going to be a major move in gold, but so far that hasn't happened. Thankfully hasn't cost me any money. It's just sort of I've just
made you less money than the other trades.
Well, yeah, I've just sort of got into position and sort of scaled up, and then it's let me down. And I've usually sort of got out break even or pretty tiny loss here, but it's it is just one sector I'm watching there, just because historically it can have decent moves. So but yeah, it's interesting to watch here. Just I know Silver Lake's had a nice little it's retested the low here, gone marginally lower. There is some timing now. I think most of these gold stocks are around 144 calendar days from the high, which is a bit of a Gann cycle that he often looks out for. So just sort of something to monitor. There's not great resolution in that cycle, but I am seeing volume for a few of the stocks starting to come in. So that's the one thing that I like to sort of see. So I start to see signs of more accumulation occurring here, but yeah, just it's let us down here. So you've got to be, I think you just got to give it a bit more time here, but definitely some interesting things possibly occurring there for some of the gold stocks. So I'll be watching those pretty closely here over the next week or so.
Okay, well, adding those gold stocks to the watch list will be something no doubt can come back on. You did touch on this already, so there's that screen. If anyone wants to get in contact with you, they're the contact details on screen. Are they the best ones, Gary? Yeah,
that's right. Yeah. Just to all the traders out there, all the just be a little cautious here over the next sort of 4 to 5 weeks here. I think it might get a little rocky, that's all.
Well, being cautious the next 3 to 5 weeks, no doubt they'll come back. Have a look at your updates. You can click on the right-hand side to see where Gary unpacks the leading stocks charts and looks for trading opportunities in that. And then also he's mentioned false breaks, which sometimes can be similar to trading on springs, which is another one from the side. Thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.